Hi, Miss Hafiza. We are from Group 4, and the topic that we're going to present today is Malaysian budget announcement and its impact on business and individuals. The group members are Anisha Jain, Ravinder Kaur, Kushantini Nair, and Gopay Eun. And this is our mind map that we are going to present today relevantly.
Hi, I'm Ravinder Kaur Dhaliwal and I'm going to be talking about tax incentive and corporate tax. Tax incentive can be divided into four categories. The first one is green technology incentive. Green technology incentive can be divided into two: Green Investment Tax Allowance (GITA) and Green Income Tax Exemption (GITE). GITA is 70% of statutory income is extended for the next 3 years. For GITE, income tax exemption of 70% on statutory income up to 10 years. The next one is organizing arts, cultural, sports, and recreational activities. For that, income tax exemption of 50% of statutory income was given approval by the Ministry of Tourism, Arts and Cultural of Ministry or Ministry of Youth and Sports. The income derived by a foreign from participating in the approved activity is also exempted from income tax. The next one is purchase of tourism vehicle. Purchase of tourism vehicle is allowed 20% of initial allowance and 40% of annual allowance on the purchase of new locally assembled excursion bus. The fourth one is organizing conference in Malaysia. Currently has 100% exemption on statutory income to resident conference promoters who brings at least 500 foreigners participants annually to attend conference in Malaysia, and their main activities should be other than promoting and organizing conference. There are four categories that we are going to discuss on corporate tax. The first one is tax deduction on cost of listing in Bursa Malaysia. Tax deduction of up to 1.5 million ringgit to be given to technology-based companies. The tax deduction on listing costs are fees to authorities, professional fees, and underwriting, placement, and brokerage fees. The next one is small and medium enterprise (SME). A resident company with paid up capital of up to 2.5 million, not more than 50 million, and a limited liability company (LLP) with total contribution of capital of up to 2.5 million ringgit are categorized under SME. Tax rate of first 600,000 ringgit is 17% of chargeable income, and the remaining tax rate is 24%. The third one is secretarial and tax filing fees. Those fees are allowed tax deduction. For secretarial fee is up to 5,000 ringgit, and for filing fee is up to 10,000 ringgit. The combination of both is only allowed up to 15,000 ringgit each year. The last one is small valued asset. The qualifying expenditure for small valued asset are 2,000 ringgit per asset, and the total qualifying expenditure for overall asset bought in bulk is 20,000 ringgit, and they would be qualified for 100% capital allowance.
Hi, I'm Anisha Jain Louis. Today I'm going to present about individual tax and real property gains tax. Firstly, looking into income tax rate for individual to enhance the progressiveness of the personal structure, it is proposed that a new band for chargeable income in exceeding of 2 million ringgit increased by 2% from 28% to 30%. For the non-resident individual tax rate is similarly increased by 2% from 28% to 30%. For the PRS withdrawals, currently any pre-retirement withdrawals from PRS are subject to a withdrawal tax penalty of 8%. However, in the budget 2020, it is proposed that pre-retirement withdrawals from PRS for healthcare and housing purposes with the same terms and conditions as EPF would not be subject to penalty for early withdrawal. Now, looking into the tax relief for parents to reduce the financial burden of parents in providing childcare and early childhood education, it is proposed that the individual tax relief be increased from 1,000 ringgit to 2,000 ringgit. This proposal seems to give a positive impact on parents. In addition, focusing on the extension of tax exemption for women returning to work from a career break, it is proposed that the existing tax incentive be extended for a period of 4 years. That is, for applications received by Talent Corporation from 1st January 2020 until 31st December 2023. The exemption period is from year of 2018 to year of 2024. Talking about the medical expenses, currently, income tax relief of up to 6,000 ringgit is given to resident individual on medical expenses for serious diseases in respect of self, spouse, and child. This tax relief includes expenses of up to 500 ringgit for complete medical checkup. However, to reduce the financial burden of married couples in seeking fertility treatment, it is proposed that the scope of income tax relief on medical treatment expenses be expanded to cover the cost of fertility treatment for married couples as well. Furthermore, to encourage more employers to make PTPTN loan repayments on behalf of their employees, it is proposed that the tax incentive and hence the personal income tax exemption for their employees be extended for a further period of 2 years, which is from 1st January 2020 until 31st December 2021. Finally, about the donation, the capital on tax deduction for contribution for charitable and sports activities as well as projects of national interest is proposed to be increased from 7% to 10% of aggregate income. Explaining about the real property gains tax, which is RPGT, currently the market value of real properties on 1st January 2000 is adopted as the acquisition price in determining the chargeable gain or loss for the disposal by Malaysian citizens and permanent residents of real properties acquired prior to year 2000. As a measure to improve the treatment of RPGT on disposal of real properties by Malaysian citizens and permanent residents after 5 years from the date of acquisition, it is proposed that the market value as of 1st January 2000 will be replaced by the market value as of 1st January 2013. as the acquisition price of the disposal of real properties acquired prior to year 2013 by Malaysian citizens and permanent residents.
Hi, I am Kushatini Nair Ravindran. I am going to present about the tax administration, custom duty and entertainment. First, let's look into entertainment. Previously, the tax rate of entertainment duty is 5%, which will be imposed for the stage performances done by the local and international artists who were not certified by the Malaysian Communication and Multimedia Commissions. For the year 2020, entertainment duty of 5% is fully exempted for admission tickets for the stage performances in Kuala Lumpur during Visit Malaysia year 2020. This involves local and international artists who does cultural and artistic performances which will be placed in the federal territory of Kuala Lumpur, Labuan and Putrajaya. With this exemption, there will be many concerts to be held by artists which can promote the Malaysia tourism. For example, international artists performing at Malaysia will lead to an efficient advertisement about Malaysia's tourism to other countries. Next, let's look into the tax administration. First is about the donation reporting threshold. The donation reporting threshold has increased to Ringgit Malaysia 20,000. It will be easier for the donors who donate less than the threshold to get exemption as they need not to fill up any application. Next is the introduction of tax identification number to Malaysians and the companies. Malaysians above the age of 18 and all the corporate entities will be assigned a tax identification number at January 2021. It is also said that the government will be holding engagement session with stakeholders to receive feedbacks and comments in the year 2020. This will ensure that no individual and companies will be able to avoid their tax obligations. From this, government will not face any losses in terms of income taxes received from the people. Next, penalty of late payment. The tax remains the same. 10% will be imposed on the outstanding amount. An additional penalty of 5% will be imposed if it is still outstanding within 60 days from the due date. Late penalty ensures all the taxpayers to pay their taxes without failure. When it comes to appeal on penalty, an appeal can be done in writing within 30 days from the statement of account. Taxpayers can make application on the extension of time if they have missed writing application within the 30 days. From this, a fair chance is given to the taxpayer who would want to appeal. Moreover, custom duty. There is a fall of export duty rate on palm oil. This will definitely boost the production of palm oil. The industry will do more export of palm oil. Moreover, there is an exemption for the tourism vehicle, which is 50%, and this will definitely promote the Malaysia tourism industry.
Goh Pei Eng, I will explain about the stamp duty, sale and service tax in this assignment.
Now I will explain about the stamp duty. The first part of stamp duty is RTO, rent-to-own. There's two targets under these sections. The first one is house developer to financial institution, and the second one is financial institution to the buyer. The full stamp duty exemptions for the first resident home value at 500,000 subject to two conditions. The first one is financial institution regulated by the BNM, and the second one is housing developer collaborating with the financial institutions that register with NHD and KPKY. And the impact of the individual is this can encourage the younger generation to buy their own resident house. And the second part of stamp duty is transfer of property by love and affections. And under these sections, the stamp duty exemption is given to Malaysia citizen and non-Malaysia citizen. For the citizen, is able to get 50% exemptions of stamp duty. And for the last part of stamp duty is the foreign currency loan agreement. The maximum amount of stamp duty under these sections is increased from 500 ringgit to 2,000 ringgit. For now, I will explain about the sale and service tax. The first part of sale and service tax is target on the exporter and manufacturer. Sale and service tax is fully exemptions on the importation and purchase the raw material, components, and packaging material that will be used in the manufacturing or productions. And it is not required to determine the quantity of the raw material. And when the sale and service tax need to be paid, the sales tax will need to be paid on the portions of manufacturer exemptions goods that are not exported. And the second one is when waste or refuse of raw material, components, and the packaging material. And these can help to lower the wasting level of import raw material in manufacturing or production. And the second part of sale and service tax is about the group relief. And under this section is state the value of the service does not exceed 5% of total service that provided by the company to the employees within the 12 months. And for the last part of the sale and service tax is the exemptions for training and coaching service for the disabled persons. And under these sections, there is a condition is the training and coaching service must be provided by the central register with the Minister of Health Malaysia or the Department of Social Welfare. And the second one is the center must endorse by any national associates for disabled persons and register with the Society Malaysia. And this can encourage the business in Malaysia to help the disabled persons and also give them a job opportunity.
This is the end of our presentation. Thank you for watching.